Hello everyone. Today we're going to cover our favorite topic, business immigration. Why it is our favorite? Well, first of all, because we work with business files on a daily basis and can compare all the existing business immigration programs in Canada, not in theory, but from our practical experience. So, if you consider business immigration as a path to Canadian citizenship, you have probably heard about PNP Entrepreneur Program. They exist in various provinces, and we want to generalize them under one definition of PNP. What is PNP, or Provincial Nominee Entrepreneur Program? Well, the definition from the government says this stream provides a pathway to Canadian permanent residency for experienced business people who can establish themselves in Canada and invest in and operate a commercially viable business that can provide significant benefit to the provincial economy. Well, sounds great, right? Well, we can say that this stream has own requirements. We're not going to focus on them, but we will focus on one particular subject, the cost associated with this program. If we take officially proposed cost of any PNP, and we're just giving you an example, the requirements are quite affordable for business people. For example, we have a requirement for net worth at a level of $600,000. Minimum investment sounds great too. It's about $200,000. And we're talking about program costs associated with processing, fees, and everything. So roughly we're talking about $4,000, $5,000 fee. But what about hidden costs of any PNP program? Let's calculate. If we're talking about hidden costs, we have to cover everything that people have to spend on the way to their PR status. For example, if you run the business, you have operational cost. If you run the business from leased or owned property, you have to lease it or buy it. If you run a business and you have inventory, you have to purchase that. If you have transportation cost, if you have property taxes, if you purchase property, then it's significant addition to your budget, right? 20% if you buy a property, it's a big chunk of cash. If we're talking about loss of income in country of origin, that's significant loss of ongoing income stream, right? And for example, we're talking about business proposal cost or business planning cost and any professional services cost and anything related to legal and accounting cost. I would like to share the infographic we prepared for you to address the issue of real accumulated cost of PNP-based permanent residency. By the time of your submission, you normally spend about $40,000 to $50,000 on business preparation, exploratory visit to Canada, and other business expenses. At 6 months, you're out of your pocket probably for around $100,000 spent on legal fees, filings, travels, business setting, and by the 1 year of operation, at the point of your nomination, you must present expenses at a level of $200,000 as required by agreement with the province. But don't forget, you have to run your business up to the point of getting your PR. So by year 2, you basically spend around $550,000. By the time of your assumed permanent residency, let's say in 3 years, because it takes time and it's one of the longest applications, you actually spend about $700,000. And don't forget, every applicant filing a loan because that's how the program operates. Is there any real alternative for business people willing to immigrate to Canada using their ideas and experience? Yes, and the alternative is Startup Visa Program. Even though it's called visa, it is a solid path to Canadian permanent residency. It's important to notice that Startup Visa doesn't have any minimum net worth nor minimal investment requirements. But investors normally prefer to deal with equal venture partners who can participate in sharing such business expenses as lease, wages, utility, trademark search, marketing, and product development. As you can see from this graph, initial expenses are similar to provincial nominee program, which is about $40,000–$50,000 spent on business planning, exploratory visit to Canada, marketing costs, legal expenses, etc., etc. But remember, up to 5 teammates can share all the cost. So in 6 months, when you already in Canada building your business, your expenses can be about $100,000–$150,000. By the time you get your PR, which is about a year, your expenses can be upward $300,000–$350,000. We have already covered multiple topics related to Startup Visa program, which you can find on our channel. One of the main differences between these two business options related to the situation when you fail to build your business. Let's take a look at this comparison table. Failure to meet the terms and conditions of your signed provincial nominee performance agreement within the imposed timeframes may result in refusal at the nomination stage or later on. The performance agreement is fixed and includes type of business you own and operate and its location, eligible investment amount, the number and type of positions to be created for Canadians or permanent residents, active management requirement, residency requirement, timeframes within which you must meet requirements of the program. In contrast to PNP, if you immigrate through the Startup Visa program, what happens if your business fails? It doesn't affect permanent residency status. RCC recognized that only every other business will succeed, and this program was designed so that the risk is shared between the public and private sector. So if you're ready to try your innovative idea for immigration purposes, send your request to this email below. We provide free assessment for Startup Visa businesses and we'll be happy to evaluate your idea. For other immigration updates, don't forget to subscribe and click the bell to get notifications about new videos from any visa. Thank you for watching.